Hey, good morning, everybody. Welcome to another daily market report brought to you by Mike Bjork. Today is Thursday, May 31st. And, well, we got a few economic news releases. Of course, the biggies will be tomorrow, but today's got some pretty big information as well. We'll kind of start off with the ADP employment for the month of May, as this might give us some foresight as to what the Bureau Labor Statistics will provide tomorrow. So basically, they said 113,000 new jobs were created back in April. And for May, it basically came up 133,000. So it looked like there's a little bit of increase for May, but again, sometimes the Bureau of Labor Statistics come out completely different. So it comes in pretty bad tomorrow. I would expect a nice rally in the bond market, and of course, not so good numbers for the equity market, or they may even be pricing it in a little bit now, as we've been kind of seeing some drops later in the week. So. Uh, Today, now we'll also go with the weekly jobless claims. We had 373,000 jobs, people applying for unemployment last week. So we figured it would kind of dip a little bit, about 370, and actually jumped up. So we now are, this has been kind of jumping up a little bit. So we got to watch this to see if we go above the 400,000 level again. So right now we got, as of this week's reporting, so which is actually represents last week, 383,000 people applied for unemployment. We also got the GDP revision for the first quarter. We had 2.2 for the first quarter. It was the first assessment. We get about three of these, so next month we'll have probably the final revision. We figured it'd come down about 1.8, and it did drop down to about 1.9. So not quite as far as expectations, but still a pretty big drop, about 0.3%. So not obviously very good right there. Another item to note is businesses or manufacturing in Chicago region for the month of May. We had 56.2 back in April. We figured kind of increased a little bit to 56.8, and it dropped down to 52.7%. So this is obviously a not very good sign right here, as this is actually the largest drop we've had since Chicago's experienced since September of 2009, and it's also 3 consecutive months we've had continued drop in their region. So this is obviously something to keep an eye on, as if this is going to be a trend nationally or if it's just one region. If we're going to have again another slowdown, maybe a possible recession here again. So those are the things that are on the investors' minds. So jump over to the headline news here, and we got the stock market's down currently. Now there's a couple of Fed members who are speaking today, and we'll start off with the Fed member Pianato. I just kind of put her quote in there. She said, "My current assessment is that the real economy continues to show considerable cyclical weakness. This assessment, along with my outlook for moderate growth and subdued inflation, calls for today's highly accommodative monetary policy." Now, another one was speaking in Japan, Fed member Bullard was discussing his concerns over the Europe's crisis and mentions that the Fed's best weapon is kind of easing. So the Fed has that flexibility to be able to utilize it if needed. So with her assessment of saying highly accommodative monetary policy, and him talking specifically, even mentioning quantitative easing, has to make you has to ease probably investors' concerns in some respect that they could potentially use this. And like we were saying before, remember when they made no mention at the Fed meeting, and basically the markets kind of tanked because they were disappointed not to hear any talk about quantitative easing, as it's kind of hard to take crack away from a crack addict. So in a sense, so when they get kind of money given to them all the time, they get kind of used to it, and it's kind of hard to pull that or tighten that up a little bit from that. So this is probably helping a little bit, some of his comments here, but it'll probably help them more once they get to the Fed meetings and such. So, so when we get the next Fed meeting, I'm sure they're going to be listening for this, since it seems like a few of the members are actually outwardly kind of speaking of the possibilities. So now let's go to take a look at the bond market and see what interest rates are doing. We are doing actually phenomenal. We had a couple opening gaps, but we're at levels we really haven't seen. So right now we're phenomenal. We're at the 105, which I don't recall ever seeing at the 105 on the 3.5% coupon, Fannie Mae coupon. So right now we're at probably all-time lows when it comes to interest rates. These are extremely great for the economy and everything. So it'll be so if you guys are looking to buy, I mean, right now is phenomenal time. You're getting some phenomenal rates, and you're also looking at refinancing, again, locking yourself long term for some phenomenal rates. So definitely take advantage of these if you're out there. You guys have a wonderful day. Enjoy the lower interest rates today. We had definitely an improvement, as you can see by the green upward trend here we're having. And I will see you guys tomorrow with the big news for the jobs reports. Have a good day.